is Paul Donovan from UBS's Global Economics Department. Now might be the time for people to consider whether panic is really the best response to the situation. We have a plan. Inject capital, cut rates. The plan is being implemented in the United Kingdom. It will be implemented in the United States, and for Europe we must hope for the best. Alongside all this, the US is apparently mulling the idea of guaranteeing bank debt and removing the limit on deposit insurance for the banking system, so says the Wall Street Journal. This is similar to the actions of the Swedish government in the early 1990s. The Swedes guaranteed all creditors of their banking system and by doing so brought about a period of stability to the financial markets. The Nordic bank bailout probably remains the best model for dealing with this crisis. The Japanese bank bailout perhaps serving as a model of how not to do it. While such discussions about policy initiatives are laudable, whilst they're taking place, markets are exhibiting pure panic. In Japan, the Nikkei fell over 10% after the lunch break, and the JGB market has fallen as well. In other words, the Japanese are fleeing for cash. This is both irrational and understandable. Irrational because Japan does not have a banking crisis now, and so the contagion is purely the contagion of panic rather than of fundamentals. Understandable because having been through a banking crisis over the last 18 years, the Japanese are understandably highly nervous about repeating the experience. Yamato Mutual Life, an unlisted life insurer, filed for bankruptcy following losses on its portfolio, the first Japanese life insurer to fail for 7 years. Credit rating agency Moody's, meanwhile, has been making noise about Morgan Stanley and Goldman Sachs. The problem would appear to be that, with the possible exception of the United Kingdom authorities, market speed has consistently overtaken government responses. For Paulson to talk about injecting capital in a few weeks is not terribly helpful when markets seem barely capable of thinking more than a few hours ahead. The G7 meets today in Washington, and the good news to take from this is that the scale of the market devastation may well force finance ministers to realize the extent to which drastic action is required. Coordinated bank bailouts seem unlikely. Japan doesn't need to, the UK has done it, the US is about to do it. A coordinated statement on injecting capital is possible. Coordinated pledges on liquidity are certainly possible. Measures to restart the wholesale funding market would also seem plausible. The problem, again, is that any statement from the G7 comes out after European markets have closed. Bush addresses the American nation before European markets close. It seems safe to assume that investors will not be looking too much for that. Not much else matters in terms of markets today. It is Friday, and it's been a long and stressful week, and it is the duty of an economist to point out the positive in this environment. One, we have a plan. It came late, to be sure, but it is the right thing to do. Two, once the panicked selling has stopped, the solution is at hand, and it's a solution that has clearly been embraced in the Anglo-Saxon economies. Three, inject capital into the system, cut rates. It is what has to happen. In the meantime, I think we should aim to take a deep breath and think stirring thoughts. To that end, the UBS economics team offers the following motivational poem. If you can keep your cash when all about you are losing theirs and blaming it on you, if you can trust yourself when all men doubt you, but make allowance for their doubting too, if you can market and not be tired by marketing, or explain your views with patient sighs, or being scapegoated, don't give way to scapegoating, and yet are always right and eternally wise. If you can derive but not make CDOs your master, if you can think and not make theory your aim, if you can meet with triumph and disaster, yet treat your forecasts just the same, if you can bear to hear the truth you've spoken, twisted by sales to make a trap for fools, or watch the econometric models broken and stoop and build them up with worn-out tools, If you can talk with bond dealers and keep your virtue, or walk with IBD, nor lose the common touch, if neither FX nor equity can hurt you, if all clients count with you, but none too much, if you can fill the unforgiving minute with opinions that are your best guess, you'll be overworked with pay that's fleeting, and which is more, you'll be an economist of UBS. That's all for today. Have a good day.